Hi everyone, good day. Good day, Sahasham. So today we are going to present on our topic 5 Code of Ethics Auditors on problem case. So before I start, let me introduce myself and my team members. My name is Tarini.Vijayan with a metric number of 01DAT20F2069, following by my team members Lau Yong Wei with the metric number of 01DAT20F2059. The second is Leon Chilen with a metric number of 01DAT20F2068, and also Chu Kenhua with a metric number of 01DAT20F2070. Next. So this is the table of content where we are going to discuss on case 1 question and also the answer for case 1. Then the case 2 question and also answer for case 2 and also the references. So now I'd like to call upon Chu to continue the presentation.
Thank you, Tarani. So these are the questions for case 1. Next. Next. Okay. For the first situation is about compliance with law and regulations. By referring the phrase, an inventory spreadsheet maintained by the financial controller and were easy to spot because they were highlighted in red. One of the audit team inspected a sample of inventories in question. According to paragraph 11 in ISA 250, consideration of law and regulations in an audit of financial statement and the objective of the auditors are to obtain sufficient appropriate audit evidence regarding compliance with the provision of these laws and regulations, generally recognized to have a direct effect on the determination of material amount and disclosures in the financial statement. Next. And to respond appropriately to identify or suspect non-compliance with law and regulations identified during the audit. So this ISA 260 focus more on the communication from auditors to those charged with governance. Nevertheless, effective two-way communications is important in assisting the auditor and those charged with governance in understanding matters related to the audit situational details and developing a constructive working relationship. This relationship is developed while maintaining the auditor's independence and objectivities. Next. For example, those charged with governance may assist the auditors in understanding the entities and its environment, in identifying appropriate sources of audit evidence, and in providing information about the specific transaction or event. Thus, those charged with governance in fulfilling their responsibility to oversee the financial reporting process, which can reduce the risk of material misstatements of the financial statement and also can help them to avoid the fines and penalty in the future. Next, I would like to call upon Lau Yong Wai to continue this presentation.
Thank you, Chu. Now, I would like to talk about the second situation, which is related to the confidentiality. For the phrase of the audit team requested to look at the spreadsheet again, but he refused. So you imply with the auditing standard ISA subsection 114.1. A professional accountant shall comply with the principle of confidentiality, which requires an accountant to respect the confidentiality of information acquired as a result of professional and business relationships. An accountant shall not use confidential information acquired as a result of professional for the personal advantage of the accountant or for the advantage of a third party. And also, an accountant shall not use or disclose any confidential information or receive as a result of a professional or business relationship after that relationship has ended. Next. An accountant shall not take reasonable steps to ensure that personnel under the accountant's control and individuals from whom advice and assistance are obtained and to respect the accountant's duty of confidentiality. Subsection 114.1 paragraph 2 in deciding whether to disclose confidential information, factors to consider depending on the circumstances include whether the interests of any parties, including third parties whose interests might be affected, could be harmed if the client or employing organization consent to the disclosure of information by the accountant. Next. And also for this subsection, whether all of the relevant information is known or substance to the extent practicable, factors affecting the decision to disclose include which is the unsubstantiated facts and also the incomplete information, and also whether the parties to whom the communication is addressed are appropriate recipients. Next. And for the solution for this phrase is, according to the paragraph 25, confidentiality, the need for the auditors expect to observe confidentiality requirements, including the confidentiality provision of relevant ethical requirements that apply to the auditor of HY & Co. The audit team should produce additional requirements that may be imposed by law or regulation. If any, the audit team also specific confidentiality provisions requested by the entity, if any. So next I will pass to Chu to continue.
Thank you, Lau Yong Wei. For the third situation is about intimidation threat. By referring the phrase, he also threatened to remove them from the premises if they continue to ask questions which were not relevant to the audit of the hospital financial statements. According to paragraph 1 in ISA 300.6, threat to compliance with fundamental principle might be created by a broad chain of fact and circumstance. Next. For example, a professional accountant being threatened with dismissal from a client engagement or the firm because of a disagreement about a professional matter. A professional accountant feeling pressure to agree with the judgment of a client because the client has more expertise on the matter in question. A professional accountant being informed that a planned promotion will not occur unless the accountants agree with the appropriate accounting treatment. A professional accountant having accepted a significant gift from a client and being threatened, the acceptance of this gift will be made public. Next. According to section 340.2, offering or accepting endorsement might create a self-interest, familiarity, or imitation trait to compliance with the fundamental principle. In section 340.3, set up requirements and application material relevant to applying the concession framework in relation to the offering and accepting of inducement when performing professional service that does not constitute non-compliance with law and regulation. This section also requires a professional accountant, which is the finance director, to comply with relevant law and regulations when offering or accepting the inducement. That's all from me. Next, I would like to call upon Lau Yong Wei to continue this presentation.
Thank you, Chu. Now is for the fourth situation, which is related to the withdrawal from engagement. With the phrase of, since then, the audit team have been unable to complete their audit of medical inventories. This phrase will imply with the auditing standard ISA 220. For the paragraph 11, independence, the engagement partner shall form a conclusion on compliance with independence requirements that apply to the audit engagement. The engagement partner shall take appropriate action to eliminate such threats to reduce them to an acceptable level by applying safeguards, or if considered appropriate, to withdraw from the audit engagement, where withdrawal is possible under applicable law or regulation. The engagement partner shall promptly report to the firm any inability to resolve the matter for appropriate action. Next. And for the paragraph 6, which is the threats to independence, the engagement partner might identify a threat to independence regarding the audit engagement that safeguards may not be able to eliminate or reduce to an acceptable level. In that case, as required by paragraph 11C, the engagement partner reports to the relevant person within the firm to determine appropriate action, which may include eliminating the activity that creates the threat or withdrawing from the audit engagement. And for the solution for this case, for this phrase is if the audit team suspect management involved in any serious unlawful actions about the financial statements, they may rethink whether to reserve the management as an auditor and to withdraw themselves from audit engagement. That's all from me. I will pass to Leong to continue.
Thanks, Lau. Now I'm going to talk about the answer for case 2. According to SCCS Code of Ethics and Conduct, the following factors must be considered before the internal audit engagement should be accepted are if the assignment will relate to the internal controls over financial reporting, and ICFR stand for internal controls over financial reporting. It pertains to the maintenance of records that reflecting transaction and disposition of assets. It also ensures that transactions are recorded as necessary to permit preparation of financial statements in accordance with GAAP, General Accepted Accounting Principles, and that income and expenses are authorized. Lastly, it provides assurance regarding prevention or detection of unauthorized acquisition, use, or disposition of assets that could have a significant effect. The importance of internal controls for financial reporting. ICFA ensures that investors trust the disclosures a company releases. One of the best ways that investors can have reasonable assurance that the risk of material misstatement has been mitigated is for them to know that the company's internal controls are stable. Lastly, the effectiveness of internal control reduces the risk of material misstatement, improve financial statement quality, include disclosures, and attain adequate data security. That's all from me. Now I'm going to call upon Dharani to discuss the second answer.
Thank you, Chilin. So the second answer will be if management will accept responsibility for implementing appropriate recommendations. So as per ACCA's Code of Ethics and Conduct, providing internal audit services can result in the audit firm assuming a management responsibility. To mitigate for this, it is appropriate for the firm to assess whether management will take responsibility for implementing recommendations. Further, for all a listed company, the code prohibits the provision of internal audit services that reviews a significant proportion of the internal controls over financial reporting, as this may be relied upon by the external audit team and the self-review threat is too good. Next. So the management can implement appropriate recommendations by firstly standardize and automate. High efficiency gains can be realized by automating and standardizing the processes and steps of data management. Here we mean to also include the non-digital processes, the way of working, and that's how we do it around here. So by making the operations as transparent as possible, you will be able to get them mapped out and set some as best practice standards. For example, in case there are multiple teams doing very similar work, as it happens under these companies, they would need to align their practices and share their tips and tricks. So once the process is standardized, you can start looking into automation opportunities. So automation can be performed without the need of serious investment. So next slide. So the second one is to adopt a blue ocean strategy. So by adopting a blue ocean strategy, several data management representative measuring points will have to change. For example, the ability to automate and expose data for consumption in self-service fashion is key differentiator of the MAS compared to a standard DM situation. So the data management departments would need to search for solutions that eliminate unwanted situation by creating new favorable ones. So for example, adoption of cloud-based technology can bring with itself new capabilities and possibilities that would eliminate high time to market. So the last point will be next point. Ask your customers. So every department or team has its own interpretation of what needs improvement. Some may consider some processes too lengthy or pure bureaucracy, while others will see the benefits they produce, such as compliance and visibility. Ultimately, these are internal perspectives that the data management teams have, but they also need to understand how it all seen from outside, from a data management customer perspective, such as data owner or data steward. So measure the statement on the scale varying from strongly disagree to strongly agree and capture the comments that come together with each answer. So at the end, you should have only a measuring method for improvement, but also a way to identify the areas of improvement. From there on, go for the highest impact with the minimal developments. So in conclusion, audit recommendations identify risk to the successful delivery of outcomes consistent with policy and legislative requirements and highlight actions aimed at addressing those risks and opportunities for improving entity administration. So entities are responsible for the implementation of audit recommendation to which they have agreed, and the timely implementation of recommendations allow entities to realize the full benefit of audit activity. Next. So that's all from us. This is the reference that we've used. Next. That's all from us. Thank you.